Good morning. This is the Option Pit AM Volatility Report. I am its founder, Mark Sebastian. With me, as always, is my good friend, Andrew Giovinazzi. Let's talk about what's going on. If you go to the blog, I did a dry run of the webinar I'm doing tonight yesterday, and it went well. Andrew's going to go through the slides today and say, Mark, as good as that webinar is, here's the things I would do to make it better. And I'm going to then implement those. So, if you want to see the super awesome version tonight, then, let me know. There is, obviously, we put out a big email to our list and to this morning, so everyone should have an opportunity to get themselves registered. And why are we doing this? Is it because we're great? Is it because we're nice? No, because we're trying to sell you this awesome course. It's going to be Saturday the 28th. It's going to be 3+ hours, probably more like 4, just knowing how we operate. And it's going to be creating income using option spreads. So we're going to talk about, whereas my presentation tonight is going to give some important things, important steps to kind of beginning to build a portfolio. We're going to dig into the nitty-gritty on that Saturday, okay? How do you decide in detail whether to do a condor, a butterfly, a debit or credit spread, VIX, you name it? How do you decide that? Well, you're going to learn, and that's really what we're going to be teaching. And it should be a lot of fun, and we're looking forward to it. And we think that you will be very pleased with the result. And for $147, we think it's totally worth it. Best part, you sign up and then you listen to it by the end of March. And I'm going to, at some point in time, drop a word into the presentation, a word. And if you either email that to me, I will rebate you $30. That is how awesome. Now, here's the best part. Are you a annual or monthly subscriber to Option Pit Live, Gold, Platinum, or Professional? Guess what? It's free. Awesome. So, that's what we want you to know. So it's a pretty cool thing. So let's talk about the market. Well, we've got the FOMC minutes today. All right, that's kind of the big 10,000 pound elephant in the room, and that's really what's holding up volatility. All right, that's about the only reason that there is any increase in volatility. The trade we spent a ton of time looking at yesterday was the 17, 16, 15 put butterfly in VIX, and that was available for about a quarter. It is going to be a blasted home run. It'll probably double in value because I think looks like VIX is going to settle between 1630 and 1640. I would expect VIX to kind of rally through the day. Why? Well, FOMC. All right. The people are afraid of Fed raising rates. Well, if you look at that PPI today, and you look at the lack of increase in housing starts, and you look at the lack of increase in wages, and you look at the lack of inflation, and really only a few months of decent job growth, the idea they're going to raise rates 4 months from now is preposterous to everybody but probably the Federal Reserve, and that's what scares people, is they are thick in the head in understanding what exactly is happening in the market. So that's kind of what we're looking at. Other things moving around is oil. Oil had a nice pop, and now had a nice pop back yesterday after being down pretty hard on the day yesterday, and is now pretty solidly not doing much over the last few days. It seems a little range bound. That may be setting up as maybe a potential bearish broken wing butterfly because the volatility is still over 50% in the OVX, which is extremely high. VRO really, well, still stupid. Now, it looks like the VRO is around 1660, which is still makes our little fly a winner, but maybe not the home run it was, and that's one of the crazy things about VIX expiration and why I always tell people close your shorts. VIX expiration is the best it's one of the few expirations that I think there's some statistical edges in speculating against, but it's also one where I would never carry a short position into. So, you know, as I look, what we're going to see is the market probably easing off all day into the Fed meeting, and then when FOMC minutes come out, I could see. I mean, if we're going to have a sell-off, it would be on the day. It's not going to happen until after the minutes. If the debate looks like, hey, maybe we're not going to raise rates in June, look for a rally. But, you know, at one of these minutes, they're going to basically have to come to that conclusion. So that's what I would be on the lookout for. On, you know, other things that we're watching, we're obviously watching some of the financials and Facebook and Apple. All seem to, you know, NASDAQ seems to be slowing down a bit, although it has been a bit of the leader. As I look today, the Dow and the SPX are down the most, along with the RUT. The NASDAQ is still positive. Well, it just went negative on the day. And VIX futures aren't doing much. Okay. All right. On that note, I'm hoping everybody has a great day, and I will talk to you soon. You got questions, you can email me, marketoptionpit.com, or you can call me, 888-TRADE-01. All right, everybody, have a great day.